What is going on, investors? Hopefully, you guys had a great week out there. That is right. It is a Friday and the weekend is here. And even more importantly, that means the FAANG Stock Recap Show is here. On Friday, like we always do, we recap all the stuff that happened with the FAANG stocks in terms of news, and we talk about it from a technical perspective to get you rolling into the weekend and heading into next week with the most important stocks in the stock market. Kick things off like we always do with Facebook. Started the week at $364 per share, ended the week at about $359 per share. Broke trend a little bit from a technical perspective, not completely broken trend, but a little bit of hesitation. We'll talk about what that means from a second. Now, probably the big news, Amazon and Tesla also had big news this week, but Facebook is facing a new FTC antitrust complaint after an earlier dismissal. Now, if you're wondering, well, wasn't there a complaint already? Yes. So U.S. District Judge Honorable James Boasberg, I think that's how you say that. So the FTC filed a complaint with him, and then he came back to them and said, no, this is too broad. You guys don't make any sense. You have to define monopoly. You have to do all this stuff. And it was like a 56-page report, and he sent it back to them, and he said, well, I'll give you some time to revise this. I'm kicking it out for now, but you get some time to revise this and you can go ahead and file it with the court. Well, they did that again, and it gives Facebook until about October 4th to respond to this complaint. And it also gives likely probably the judge a little bit of time to dissect this new complaint. Now, I didn't go through the complaint in detail, but I skimmed it a little bit. Again, the FTC, in my opinion, is talking about acquisitions that they approved. They're talking about WhatsApp and Instagram, okay? Those deals were approved by regulators. When Facebook bought these companies, they were approved. And now the FTC and the government wants to walk things back and say, you've done such an incredible job integrating and growing not only WhatsApp, but Instagram, obviously, as well, that now we want to punish you for that. And I just think that is maybe you guys disagree with me, and you can leave me a comment down below. This just really bothers me. And look, I'm not the biggest Facebook fanboy. I love the stock. It's a big holding of mine. I sure as hell don't log on to Facebook more than once a month at the most, and Instagram as well. So look, I just think this is one of those things. Facebook's going to be able to deal with that. They've already got a favorable ruling by this judge already. I don't necessarily think the FTC is going to be able to add another 20 pages to a document and all of a sudden change this, okay? Facebook is not, there's plenty of social media apps. The internet is really large, okay? Yes, people spend a lot of time on Facebook, a lot of time on Instagram. Advertisers funnel a lot of money to them because, to be honest with you, the ads really work very well at Facebook and Google, which we'll talk about here in a second as well. Moving on to Apple, start of the week at 150, end of the week 148. Man, I mean, I'm sorry. Every week I'm like, Apple breakout, Tesla breakout, and neither of them have broken out. And so maybe when we don't mention, maybe it'll be one of those things, we don't mention that Apple might be breaking out soon, that next week will actually be its week. And look, the market had kind of a rough week, and Apple's a big part of the market, S&P 500, Dow, those types of things. Now, new iPhone speculation ramps up with the Apple event on the horizon. I saw here that the Apple event is expected for the iPhone 13, which is a lot of people think that's what they're going to call it. This event is scheduled for the third week of September, so we're actually a month away from that. So literally, basically a month away from this. And so we'll see what happens. I doubt there's going to be any surprises. You've got all the chip supply chain, difficulties and those types of things. It's going to be, in my opinion, difficult for Apple to have created a new iMac, created a new product that they can launch at this event, which they've done in the past. They've coupled some products and some stuff with iPhone announcements. I don't necessarily think that's going to be an easy thing to do with the way the supply chains are at the current time. Now, moving on to Amazon, start of the week higher, 3,287. This might be, in all of FAANG, your best buying opportunity. If you got money burning a hole in your portfolio right now, this could be it. And we'll talk about it more in detail from a technical perspective here, but we're sitting at about $3,200 currently on Amazon, and it has broken trend. completely broken trend. Now, this is big news. Amazon this is rumored, and this has been rumored for a long time, so we'll wait until Amazon actually confirms this themselves, but they plan to disrupt good cheer in retail sector with plan for large stores. Now, on the headline, there was some good retail news and things like that, and stocks like Kohl's and Macy's were doing pretty well, and then all of a sudden this news broke, and those stocks started to take a step back. I don't necessarily think Amazon opening their own stores would be the absolute death nail to a Macy's or a Kohl's. Could help their business, could bring traffic into a mall that needs that traffic, and so we'll see what happens there. Now, the retail spaces of 30,000 square feet would offer consumer products, top brands. So previously, Amazon obviously owns Whole Foods, so they've got grocery, but they've opened stores that obviously focused on books and focused on tech and focused on some of their own brands like Amazon Alexa and those types of things. These would be a broader store, maybe a little bit like a Target, maybe a little bit more, maybe not quite as mixed retail as that, but it'll be interesting to see. My guess, too, is you have fulfillment out of these stores to a certain degree. These stores have to be servicing Amazon.com, and maybe Amazon looks at it as, hey, maybe that's a way to take pressure off of fulfillment, because one thing that we know about Amazon and even Postal Service, USPS, FedEx, and those types of things, what do we know about that business? Incredibly supply constrained, both on the labor side and just the ability to deliver package. Those businesses are basically maxed out, and so including Amazon. And so one way that they might be able to actually take some demand off that is build stores where you have buy on Amazon, go and pick up, or something like that. That could help Amazon, weed out some of the deliveries that they have to make, keep the pressure off their delivery drivers and that segment of the business. I'm kind of thinking out loud here, but I think this is Amazon's move to do that. Will they build out a big network of stores like a Walmart or a Target or a Costco or something like that? Certainly, it's in Amazon's MO. It's in their balance sheet. It's what they can literally pull it off very, very quickly, in fact, if they wanted to, because they have all the merchandise in the inventory and that type of stuff. But I think what they could do it for is not necessarily to drive a bunch of profits to the balance sheet, but it's actually take pressure off the fulfillment channel. We'll see what happens there. Moving on to Netflix, this thing broke out. Take a look with Netflix. Started the week at $5.20. Hello. And now we're at $5.46. We're approaching the upper end of the range. We're actually on breakout alert with Netflix. Now, Disney gains. This was Disney earnings. I think it was this last week. Maybe it was the week before. But basically, Disney gains on Netflix, recounting this quarter in streaming. Disney is looking like an absolute solid number 2 competitor. As we know, if you followed this channel, Netflix is essentially topped out their growth here in North America and Canada. International markets are still doing fairly well, but as we know with international markets versus developed markets, yes, you have a stronger user growth there, but in terms of how much you can charge, like ARPU and things like that for those customers, will likely always be a little bit less, or maybe even a lot less than the United States. Certainly Disney Plus sees evidence of that. They have a lot of people subscribing for the service in India, but they cannot charge those people as much in terms of revenue per user as they can to a United States user. And so we'll see what happens. I still think the streaming segment is still kind of shaking things out, but I think we're getting to an area where I don't want to say plateau, because that kind of, implies that the growth in this business is kind of flattening out. But I think we're certainly starting to reach that level at some point. Now, moving on to Google, started the week at 2,756. From a technical, it went up huge today, like 1.29%, $35 per share. We're up to about 2,000. We'll call that 2,750 on this one. As you can imagine, just upward trend with Google. Not a lot of news out of Google, believe it or not. Now, moving on to Microsoft. Got some good news out of Microsoft this week. Started the week at 293. I tell you what, the Microsoft chart is starting to look like the Google chart. And that should get you really excited, because it basically could mean for the next 6 months, this thing is going to continue to go up. Now we're sitting at 304. Like I said, we started at 293, ended the week at 304, excuse me. Part of the gain, really a lot of the gains came this week after on August 19th, which was yesterday, the company boosted their business pricing on Office subscription products by $1. Okay, so it was $5 from a basic user. I think I have that plan actually on my computer, and it went up to $6, and then you went from 22. It's like a 10% or more increase, or $1 or $2, however you want to look at it, on each of these things. And you might say, well, that's not that big of a deal. No, this is a big deal. This is Microsoft's biggest, gigantic business, okay? And so just to raise prices a little bit is fantastic. And really, Netflix is kind of in this same boat where they've kind of peaked out in terms of user growth. I wouldn't say either company has necessarily peaked out, but one way to generate more revenue is not necessarily just get more users, it's to charge those people more. And so I love this. And we'll see on the next earnings call with Microsoft how well this price increase passed through, okay? Because if they can still grow Office 365 and see, and they've probably done an incredible amount of research on this. They know what the churn level is likely to be. So they know. This could really create a really nice upside surprise for Microsoft, because this is obviously their bread and butter business, and they just raise prices across the board. You gotta love that if you're a shareholder. Oh my gosh, I love it when my companies raise prices. That just makes me so happy. Now, Microsoft, again, we've talked about it here on the show a lot. How is Microsoft gonna grow? When you got Facebook doing, investigated by the FTC, they file a complaint, it gets kicked out, and they just come back and file it again. All these companies are going to deal with the FTC regulators and those types of things. And obviously, Microsoft has a long history in that, and they probably don't want to get involved in much more of that. The way they're going to grow is a lot of these tiny, and tiny is relative, but small in terms of what Microsoft is valued at in terms of software startups and those types of things. They bought Rubrik Incorporated just this last week. Again, deals not disclosed. You're probably looking at tens of millions of dollars likely in those deals, maybe sometimes even slightly less than that, but just absolutely fantastic in my opinion. If you're an investor in Microsoft, they're not sitting on the sidelines. They could sit on the sidelines and just buy back the stock and pay dividends. And sure, in the shorter term and maybe even the intermediate term, that's great for you, the shareholder. But long term, if you're trying to hold Microsoft for a long time, they need to keep building their business and growing it. And the way they're going to do that is through acquisition, roll up, and those types of things. And since they can't buy the big deals, might as well get the small deals. I love what Microsoft is doing. Now, moving on to Tesla. They started the week at $700. And we talked about, hey, Tesla's going to pop. Didn't pop. So maybe we shouldn't talk about it. Maybe it'll actually pop. This one actually went down below trend. So we'll talk about that, what we're looking for with Tesla. Now, Tesla had their big AI event. It wasn't as big as maybe like a battery day a couple months ago, or some other events that went obviously like a product launch, like a car or something like that. Certainly not nearly like that. It was basically an AI event to talk about their self-driving technology. And Tesla did what I actually admire Tesla doing. Tesla could play it super safe. They could come out with just a car. They could just come out with vanilla press releases. Obviously, Elon Musk is probably a lot eccentric and those types of things. So you might get a little color out of him. But this company could just play it safe and not really make a lot of headlines. No, they announced the Tesla bot, which will stand over 5 feet tall and weigh 125 pounds, and is being designed to complete repetitive tasks. I actually think, and so I think people immediately thought, oh, well, this is, what kind of consumer applications does this have? I actually think Tesla's probably thinking about this maybe in their own factories. They already have a lot of robotics in there, and so this could be just an extension of their factories and their assembly plants having another robot, this Tesla robot, assist with that. You also have fulfillment. There's a lot of robotics in fulfillment, which obviously relates to Amazon as well, and it could be that Tesla realizes, hey, companies like Amazon, UPS, they're going to go electric and stuff like that on the delivery vehicle side. But maybe the even bigger opportunity is to add add more robots to their fulfillment centers, their warehouses, the picking of the boxes, the moving of the boxes, those types of things. Just thinking out loud again. But I love that Tesla is going to do this. Is this going to impact revenues? No. Is this going to show up on the revenue? No, it's never even going to show up there. In the shorter term, intermediate term, probably not either. Maybe in the longer term, but I just appreciate companies like this that take risk. That is something that you want to look for with a company, okay? In a segment of your portfolio. There's segments of your portfolio, you like them to make no news, pay you 3 or 4% dividend, and you move on throughout your day. With a company like Tesla, yeah, I want them doing crazy stuff, okay? Tesla impressed with the AI progress, but the humanoid robot was called a head scratcher. And so analysts obviously were scratching their head because they're thinking AI, they're thinking self-driving, they're thinking robo-taxis, they're thinking flying Teslas, these types of things. Their mind was not even on a robot. And so it just shows you that the Wall Street might be focused on one thing, but Elon Musk and Tesla themselves might be just in a different stratosphere in terms of the way they're thinking. Now, sometimes those thinkings between Wall Street and what Elon Musk is thinking needs to line up. In this case, I don't think so. I actually like Tesla for thinking a little outside the box, a little crazy. Being a little crazy is not necessarily that bad of a thing. Now, auto stocks slump as chip shortage headaches continue. Man, we just can't get past this headline. I tell you what, if you got a used car, this is probably a good deal. Or if you got a lease coming up, or if you want to get out of a lease, or you want to sell a car, this is great news. Volkswagen's probably going to have to do another production cut. Toyota is looking to plans to cut global production in September by 40% from its previous plan due to shortage of chips. So we're seeing this across the board. Every maker just cannot get their hands on these chips. From what I've seen from Intel, NVIDIA, and other chip makers out there, and even TSM and the actual fabs and stuff that actually make these chips, it doesn't look, I mean, we're already well halfway through 2021, okay? And believe it or not, in a blink of an eye, we'll be halfway through 2022 really quick, okay? We're less than 12 months away from being halfway through next year. I don't think you get a handle on this problem or this issue, or really this shortage. Problems in business are often opportunities. I don't think you get past this until 2023 at the earliest, to be honest with you. Now, man, I'm doing a lot of research right now. I want to do a video on Chinese stocks because this week we saw the market pull back a little bit. It wasn't like a pullback, but you saw it didn't like continue to go up, and you saw some downward pressure on stocks. So it could be, except for today, Friday, all the sellers went home. You know, the sellers had a great week because they probably were out in their yacht, by 12 o'clock noon, and all the buyers stepped in and kind of drove stocks up later in the day. But the Chinese stocks are all just getting punked, okay? Li Auto, NIO, these types of stocks, man, they have gotten beaten down, let alone Alibaba, JD.com, and those types of things. And Tesla's kind of wrapped up into this, okay? A lot of their business, a lot of their growth, especially over the last 24 months, really 12 months or so, has been driven by China manufacturing, driven by building and selling those cars and exporting those cars out of China. And it just seems like the government in China wants to crack things down. They're in a mood to get some things done. And I won't pretend I'm an expert on the Chinese government, but I'm trying to research as much as I possibly can and get as much information from local sources and those types of things, which is difficult in a People's Communist Party country, but we'll get as much information as you can. There could be some opportunity here, or it could be just absolutely stone cold avoid all those stocks, which honestly, if you ask me right now, I don't own any directly mainland China stock. I do own Tesla. I do own Starbucks, Nike. So I get exposure to it. Apple as well. I get exposure to it, but I still don't necessarily think the risk is there yet. Risk reward there yet is with those other stocks, considering, man, that government can be a complete wild card. Now, moving on to the technical side of the show. So here's our line. I don't move these. I try not to move these lines in, at least what I should say, from show to show, so I can show you kind of the change week over week, especially because many of you watch the show, and I appreciate your loyal loyal viewership of this show. Now, Facebook was locked in this uptrend. We talked about last week, I believe, it was very close to kind of breaking trend. It did break trend, but I actually had this line marked out. This was our previous lows at 347 on this one. It kind of had to take out that low to really be broken trend. And it popped up big. In fact, we're back on this trend line. So I think what you probably could do is just drop this trend line down a little bit. I wouldn't necessarily drop it down a ton. And this is also why a lot of technical guys, they actually don't like these upward trend lines. These are really just meant to kind of give you a visual on the overall trend. Most really good technical analysis guys really use these horizontal lines where they find levels of demand for the stock and then levels of sellers where sellers step in, essentially supply for the stock up above where sellers tend to step in. This one's looking fine to me, still looking like an uptrend. Next week, I wouldn't say is a critical week, but I'm definitely be monitoring it. If we do get below the 350-ish, 350, I had to make sure I had my number right there. So below 350 on Facebook, and we're at 359, and yeah, it looks like at the very least, you might chop out here. You're forming kind of a top up here, and it could be a temporary top, and it could be a top that reverses and heads lower. We'll see what happens. I think we'll get more clarity on that heading into next week. Now, Apple. Now we know. I've been saying, so I left this little line in here. We were looking for a breakout above this 150 line right here, and we were looking for it, and we got it. But we just couldn't follow it through, okay? And so really, this 150 level on Apple is still intact, but we're sitting here right in the middle of the range. What's interesting with Apple is we're now consolidating in a really, really tight range. I mean, we're talking from 145 to 150 on this one. And so it's coiling up a little bit, likely a little bit heading into September, the third week of September for their iPhone event. I don't necessarily think that event will swing this one way or another. We typically know these types of product cycles with Apple, and again, with the chip shortage, I don't necessarily think they have the capabilities to deliver a surprise product to us, and that's just not something they've done over the last several years, and maybe even longer than that. We're in this tight range. We're looking for a break above 150 or a break below 145 on Apple, and we'll take stock from it there. Now, I jumped the gun a little bit. Moving on to Amazon. Oh, my buying opportunity. Okay, so we talked about with Amazon, and we were talking about it on the show forever. This time last year, in fact, in July of last year, we kind of started our trend line, right? We started trading between 2,900 up to about 3,500-ish or so. Now, this stock basically traded in lockstep in this and then finally broke out. Right a year later, it finally broke out, and this was looking good, and I thought, oh my Lord, my portfolio is going to look fantastic over the next week because this is going to pull a Google. Well, then Amazon pulled an earnings report out that people did not like and did not appreciate, and this stock gapped from 3,580 all the way down to 3,350, and it broke a level of support here at 3,300, and now we're approaching areas where I think Amazon, it is a buying opportunity. For a longer-term investor, I don't necessarily think, what I want to emphasize is when we go over technical analysis, I do this because I know some of you guys swing trade, some of you guys do options trades, some of you guys, do shorter term trades. If you are a longer term investor and you're like me and you think for the next 20 years, Amazon is going to win the gold medal for e-commerce, particularly here in the United States, and I think they absolutely will. Will there be other competitors? Will other competitors make money? Of course they will. But when we're talking about a gold, silver, and a bronze, Amazon is going to win the gold medal. They're the United States basketball team. They're the United States swimmers. They are the best of the best. And so when a best of the best gold medal company pulls down into the bottom of a consolidation range, it is, in my opinion, and I could bring up my portfolio, but most of you have already seen it already. For the last 3 years, and I could pull up other stock accounts as well, which I'll do on future shows and prove to you, I've beaten the market consistently over and over and over and over. And I know the market's been absolutely performing great, but I've done it with this strategy, okay? I didn't just do it by buying a stock here and doing all this different stuff. No, I patiently waited for gold medal winning stocks to pull into the bottom of a range, and we're pretty much there with Amazon right now. It's sitting at 3,200. I have an area of support here at 3,100, 3,000, basically in $100 increments all the way down to 2,900. And I would look at this as if you wanted 3 shares. I know 3 shares of Amazon is a lot. Okay, it's like $10,000, especially in an IRA account where you're limited on how much you can put in. I would base each of these levels on how much in total you want Amazon. Maybe with Amazon, it's like 1 share, right? Okay, maybe 500 here, 600 here, you know, the full, whatever, 2,500 that's left all the way down here. That's how I would stagger these, because you're not going to pick the exact bottom on Amazon, but you want to get in my opinion, at these lower levels. Now, can we break 2,900? Absolutely. We could break 2,900 on Amazon. And if you do that, well, you just got to get your balls of titanium, wrapped up into your underwear and buy it again, in my opinion. So size it appropriately. Understand this stock is broken trend. It is heading down, okay? But gold medal winning stocks that head down are always a buy. Always, period. And look, if the whole stock market crashes and this thing breaks trend and goes below 2,900, well, guess what? Your whole portfolio will have gotten blown up. You can put stop losses on this one if you don't want to lose all your money, though it's obviously a viable and a very wise thing to do. For me, in my longer term portfolio, I don't really care. I'm holding for 30 years. I'm going to wait till I retire. From a tax perspective, it works out, and that's really what those accounts are for. And that Amazon, I don't know if I have room in my retirement account for 1 more share, but I'd be so mega overweight. And I'm just going to tell you what I'm going to do. I will probably buy this next week for my son's account. Okay. I have accounts for my sons. They're allowed to get fractional shares, whatever they have in there. And I deposit money into their weekly, whatever they have in their account. I don't know what they have cash wise. It will likely all go right into Amazon, in my opinion. So we'll see what happens. And then if it goes down further, daddy will put more money into their account. My kids are going to sound so spoiled, but daddy will put more money into their account and buy more of it. That's just how I feel about it. And I don't normally give those strong of opinions about buying and selling stocks. I want you guys to make your own opinions. I'm just telling you how I feel. And based on the last several years and my investing career lasting 20 years, this is what I've been doing I made a lot of mistakes my early years in investing, and I've started to really have a lot of success. And when I see things like I do with Amazon, this is a buy. This is a buy, period. It's not unload your entire Robinhood account, do your margin to the absolute hilt. No, that's not what it means. But it is take a shot there because there's opportunity there. Now, Netflix kind of proving the same thing. This chart almost looks exactly like Amazon. We don't have a big breakout more recently, but really for the last year, in fact, over a year, we've been trading between 480 and 560 on this one. Whenever it comes down into this lower box between 520 and 480, it's a buy. Now we're up here in these upper boxes, up here to 546. We're sitting at 546. We're probably going to retest 555, 560 on this one. You're looking for obviously a break above 560 on this one. Get break above 560 on this one. And maybe you look, Google's probably not the best example, but maybe you look a little bit like Facebook, okay? You break above, stutter for a minute and then break out, or Apple as well. We were in a tight range, just like Amazon, just like Netflix, and then you break out and you kind of hover at this range. I actually like that Apple's kind of hovering on this range, and you would like to see that with Netflix. You'd like to see a break above 560 and at least hold this level, because it simply has it. This is a daily chart. It is not held above 560 for more than like 3 or 4 days at a time, and then it comes back into this box. So we'll see what happens there. It'll be interesting, certainly from a technical perspective with Netflix. I'd keep that on your watch list next week as well. Google, nothing to say here, really. I'm going to pull my keyboard up. Guys, you can see what's happening with Google. It was basically a sideways week, but there is literally nothing that I can possibly tell you about this chart other than it's one of the best I've ever seen for a mega cap company. It's one of the best charts I've ever seen, period. But for a mega cap company, it literally does not get any better than that. And I tell you what, this chart from Microsoft is starting to look very similar as well, okay? We channeled here. This is why I get so excited. I mean, look, it did exactly what Apple did. Okay, look at this area. I'll zoom in fact, so you guys can see what I'm seeing here. So this is why we look at these stocks. They're all a little related, and they trade together. But look at this breakout that Microsoft did back here, and it hesitated. This is probably over a month here, even 2 months here. It hesitated in a tight range between 230 and 240. And look, just because Microsoft does something doesn't mean Apple is doing it, but I'm just showing you these patterns are lining up. Okay, you're consolidating in a tight range with Apple, and it's going to go one way or another, in my opinion. The buyers and sellers are just kind of indifferent right here. One of them's going to take over, and the stock's going to go one way or another. And we're seeing here with Microsoft, once it ended this hesitation, it popped up, hesitated one more time, and it's boom. And we are way above trend now. I mean, we're way up here. This stock is running, and it's starting to look, in my opinion, a little bit like Google. And that could potentially mean months and months and months of gains with Microsoft. Now, moving on to Tesla, we talked about how we broke above this 700. We hesitated here. We weren't worried about it. It was similar to what I just showed you. Microsoft hesitated for a long time. Facebook did hesitate, but primarily Apple as well hesitated up on the top of a range. And buyers and sellers were trying to figure out, well, sellers kind of stepped in here, but I'm going to take this vertical line out. It is a key level of support there at 700. We're sitting at about 680 on the stock. This uptrend is still intact. I know it's not a super steep uptrend, and we kind of just looped around here, but this uptrend is still intact. Really, I think on Tesla, you get concerned if you break probably 620 on this one, which is $60 lower than the stock. You break 620 on this one, I think you got opportunities at 560, maybe 520, and then into our magical box. I don't know why I call it a magical box. It's not really magical, but down here between 400 and 480 with Tesla would be where I would buy this stock. Okay, I like Tesla. I like the EV market space. I certainly think this is a company that is going to win a gold medal in that space as well. The margins aren't as good as a Microsoft. The opportunity to expand into other markets, while people can make great arguments about that, about Tesla, I think they're way, 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 way away. Amazon is completely different. This company has so many opportunities, and maybe they're drowning in opportunity a little bit. And that's why their earnings disappointed, and the revenues and those types of things disappointed a little bit, because they're focused on so many things. But I don't mind that. Over the course of a decade, 2 decades, those things tend to kind of work themselves out. Now, on the upside, we're looking for a move back up to the 700, 720 range, and you're looking ultimately for a break above 720. Now, we might not get it on a big old candle, but if you get above this 720 range, this uptrend will likely keep churning up to 750, probably 800, those types of things. It could be that Tesla's just making a slow walk up the trend line, and it could be this one just is continuing to trend higher. That was the FAANG Stock Recap Show. Please hit that like button if you enjoyed the show. Thank you, everybody, for all your nice comments and supporting the show. It means so much to me. Thank you so much. Hope you guys have a great weekend. Good luck with your investments.